Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, all 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 4 and 5 returning negative 0.31%, up to the more defensive CBAM portfolio number 1 returning 21 basis points on the one-week basis. In terms of contributors to performance, we continue to see resilience in Japanese equity markets, with both our positions across JP Morgan and Fidelity Index Trust up more than 1.5% on the week. And we also saw that strengthening of yen versus sterling, up 1.28% as well, after the reading last week of a Japanese economy up 6% in the second quarter and surprising on the upside. We also saw some strength from global government bond positions, with Vanguard European Government up 0.96%. And interestingly, this week we've seen 5 out of 10 of our top performers being global government bond positions, with our emerging market debt position up more than 0.64% on the one-week basis, as the narrative in the market really switched away from a rising yield environment, which we're worried about earlier in the week, to some weaker PMI data coming from Europe, the United Kingdom, and also the United States, where we're seeing weaker PMI data, really increasing market bets that the Feds and the central banks across the world would be in a position where they can sort of take a pause in their interest rate hiking cycle. In terms of detractors from performance, we have mentioned in the past couple of weeks that we continue to see headwinds from Chinese equity positions after that fall in fixed asset investment and also in industrial production that we saw last week. That would see Bailey Gifford down 2.94% on a one-week basis, but also seeing headwinds across equity markets in Europe and also the mid-cap space in the UK as well, down 2.67% on those soft PMI data readings. On a quarter-to-date basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 5 in a risk-off sort of quarter-to-date basis, returning negative 1.63%, up to 1v2 returning minus 0.46%. And then again, we saw some safety there in terms of shorter dated corporate bonds, and that would see LNG short dated sterling corporate bond alongside the sterling corporate bond funds also up more than 1.1% on the quarter to date, and also seeing global high yield returning about 1% as well. In terms of detractors from performance, iShares Global Clean Energy and other interest rate sensitive thematic investments also down more than 5.37%, as the market mulled bets coming into the quarter of a sustained period of interest rate hikes coming from most major central banks across the globe. That would also see Allianz Continental European also down 5.11%. But to keep consistent here, we also saw some weakness from Pictet Global Clean Energy, down 5%, all the way down to JP Morgan Japan, all leading down more than 3.7% on a quarter-to-date basis. This week's been pretty interesting in terms of trying to see some monetary policy stimulus coming from China. We did see a 10 basis points interest rate cut in terms of the one-year loan prime rate going down to 3.45%, but ultimately the market was unconvinced that this would be sufficient to support the Chinese economy and continue to mull concerns around a sort of slowdown after the reopening sort of story did not play out as expected. Bank of Japan, core inflation early in the week, 3.3%, encouraging, seeing that inflation beginning to really pick up there in the Japanese economy and leading to yen strength against sterling, and also Japan being the only sort of developed market where you continue to see an improvement in services PMI data, and as I mentioned earlier, European, US, and also UK PMI data deteriorating in the readings earlier this week. But I think what's been the main sort of headline has been NVIDIA, which is the AI sort of play in terms of chip makers, also seeing that sustained demand and improved revenue, with sales up more than 170% on a year-on-year basis as at the end of July. But we also saw some softer jobless claims in the US economy, indicating that continued sort of resilience in the US economy. And further in the week, we look forward to hearing from central bankers in the US at the Jackson Hole Symposium.